Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of October 29th, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your market update. Okay, well, if we look at the bond chart that's on the screen, we can see that mortgage bonds have been selling off. But then last week they did, if you see the line of support there, they did hit the line of support, which stopped the bond market selling off because you know as bond market sells off, home loan rates go up. So you can see we kind of hit that bottom there that's been holding, and then on Friday finally we saw the rates, the bond market tick up, so rates did tick down, so stop that upward trend on the mortgage rate. So that was great news on Friday. We recommend floating your Delaware mortgage rate into see what happens on Monday's market to see if we can continue on the upward trend on the bond, which would help home loan rates move lower. Now, what caused the market to move on Friday to stop the upward trend in rates? Well, we saw a weak earnings report from Amazon and from Apple. So remember, bad news for the stock market is good news for the bond market. We also saw the debt crisis in Europe, still big problems over there. Spain, unemployment rate is topping 25%. So some big troubles in Spain, probably going to default on their debt just like Greece. So that is shifting investment dollars out of Europe into our bond market, safe haven trade. And then the big factor is QE3, the Federal Reserve buying mortgage-backed securities. That is what's basically pushed mortgage rates down to all-time low. And those, the Fed's in there buying every day. That is what's keeping mortgage rates low. The Fed has, the Federal Open Market Committee had their meeting last week, and they did state they will continue buying $85 billion worth of mortgage bonds till the end of the year. And then in 2013, they will continue buying at a tick of $40 billion per month until the labor market sustainably recovers. So probably throughout 2013 or until the unemployment rate simply comes down, we're going to see them continue buying these mortgage bonds, which will keep rates low. We saw some report on the GDP. Third quarter GDP did tick up to 2%. If you remember, last quarter it was 1.3%, which was pretty dismal. So it did tick up to 2%. And the projection for fourth quarter from Kiplinger is that it will be 2% again, and then throughout 2013 they're not projecting it to be much different than 2%. Now 2% is not great. It actually stinks in a robust economy. That's very bad, and we need it to be more than 2% to get the job market going and see a recovery. To give you an example, China's GDP is down, and they are maybe sliding into a recession, and they're having trouble trying to stimulate the economy. Their GDP is at 7.4%. It's been historically 10% for the last 3 decades, so they're starting to slide into a recession. And you can just give you a message of how low 2% is compared to China at 7.4%. Other news, there was some good news last week. The new home sales was increased 5.7% over August. It was up to 389,000 new home sales. So that's new construction. It's up 27.1% from September 2011. So the housing market is showing a bottom. Zillow said the third quarter 2012 average home price was up 1.3%. They're expecting a 1.7% rise in home prices in 2013. So Zillow is expecting a recovery in the housing market. It's projecting that we are at a bottom. Now they did say the recovery in home prices would be sawtooth. That means going up, falling back down, going back up. The reason why is they're projecting that the home price may fall as we end the traditional home buying season as we get into the winter months. Now, one of the questions people are asking, is there a housing shortage? Sounds kind of strange, but in some areas there actually is a housing shortage. And the reason why is a lot of these foreclosure homes that were good has moved through the market already. And any of the good existing home sales have pretty much been, when they go out, they're gone. Now, what's causing the shortage? Well, sellers still aren't real confident that the market has bottomed out, and a lot of sellers just still can't sell. They're underwater on their mortgage, so they're not able to put their home up for sale because they don't have the money to bring the difference. So what's going to take up this shortage? Well, that's new home construction. That's why we've seen new home sales up, and we've also seen building permits up. So we're going to look at the builder market to continue to grow to fill this gap for good, sustainable homes to be on the market. In the local news, what do we see? We see the next free first-time homebuyer seminar is in Dover, and that is November 13th. That's a Tuesday from 6:30 to 8:30. That's at the Dover Sheraton in Dover, Delaware. And then the next one in Newark is November 17th. That's a Saturday. There's 2 sessions to pick from, a 10 a.m. to noon or a 1 p.m. to 3 p.m. and that's at the Christiana Hilton Hotel in Newark. You can register for either one of those seminars by giving us a call in the office at 302-703-0727, or you can register online at www.delawarehomebuyerseminar.com. If you want to take advantage of these record low rates, buy a home. As I said, it looks like the market's bottom out. It's going to look to home prices to increase next year. So now is the perfect time to buy. We will give you a free mortgage consultation, get you pre-approved and out there looking, or get you in our Get Mortgage Ready program. If you need more information on that, www.getmortgageready.info. GetMortgageReady.info. But give us a call in the office, 302-703-0727. We'll get you a free mortgage planning consultation, or you can apply online, www.PRMIDelaware.com. PRMIDelaware.com. Look forward to seeing you next week.